The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the December 30th marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with some empowering beliefs. I talked about this on Friday. Let's do it again because it's really all about thanks living. Not Thanksgiving, but thanks living, folks. Thanks living centers on things to give thanks for. And more importantly, this much I know for sure, a grateful mind is a mind that will eventually attract itself to great things. Think about it. It's our attitude of gratitude that opens a door to abundance in our life. And thanks living, if lived on a continuous basis, not just once a year, not just during the holiday time period, but thanks living, if lived on a continuous basis, folks, it'll create more good in our life than anything else than we can possibly do. Because thanks living is a way of life. And it's a way of life no matter what our circumstances are, no matter what challenges that we may face. You see, perhaps the most difficult, yet the most powerful of all, is to give thanks for our problems, or our obstacles, and our challenges. That's right. Give thanks for our problems. Think about that. The reason is this. As we face our situations and overcome them, and yes, you will overcome them, you will become stronger. You'll become wiser. You'll even become more compassionate. Something to think about. You know, I've got 2 grandkids. And this much I know. We learn mathematics by solving problems, and we prepare for an athletic event by practicing against stronger opponents. Doesn't matter whether you're playing golf, whether you're playing tennis, whatever it is, you always prepare, if you want to prepare, play against a stronger opponent out there. It's like playing a game of chess. Who would you learn more from? Somebody stronger or somebody weaker out there? A stronger opponent, folks, is somebody that we can learn from. It works that way with larger problems, too. Be thankful and be grateful if you've got problems in your life. You've heard that ancient proverb, because I've shared it with you many times. A donkey may carry a heavy load of gold on its back and never know its preciousness, only its weight. That burden that you might be carrying, that might seem like a heavy load on your back. But guess what? That might be precious. That might be precious, because at some point in time, that adversity will be overcome. And it'll strengthen us. It'll strengthen you like never before. So give thanks for the problem ahead of time. How's that for thanks living out there? Perhaps, folks, if we do that, we will learn to grow. We will get stronger, and we will overcome every challenge that we face in life. Thanks living, folks. It's really what it is all about. So what do we got thanks for out here in the markets right now? Well, we've got flat markets. We could almost go barefoot water skiing. The Dow is trading up 3 points, hardly a ripple. It's trading out at 16,482. The S&P, it's down 1 point. No ripple there as well. It's trading out at 1840. NASDAQ is where the biggest ripple is. That's trading off 7 points. That is really no big deal. It's 0.2%. It's trading at 41.48. Russell 2000, it's off a point. The New York Stock Exchange, it's down 3 points out here. Gold is off about $10 right now. It's trading at 12.04. Silver off 35 cents. We've got light sweet crude. It's trading down 53 cents out at 99.79. Let's go check out oil.
Oil, that is. Black gold, Texas tea.
Yes, sir. Let's go check out Black Gold Texas tea. We've got it trade out at 99.79 right now. It's trading above the .382 retracement. Nice job there, Alberto, in the background. You got to like that coordination out there. If we go from the swing point high in light sweet crude that took place here, the one that we're looking at, back on August the 28th, the price point out there, 112.24. If we go from that high down to the low of 91.77, that came in on November 27th out here, we'll see the 0.382 retracement. The dead cat bounce, that's at 99.59. I like that number out there. Price is trading out at 99.78. You can see a little bit of a rising price channel that price is traveling within. It's a narrow banded range out there, but nonetheless, that is the rising price channel. Once we see gold, light sweet crude break below that area, that'll be our signal that the move is over. Now, a number of different indicators up here on the screen. We got price channels. You can take a look at descending price channel. That was a narrow band as price made its way down from the high back in the August time frame down to lows that were put in. You can see when price actually broke through that. That was an indication of at least a counter trend bounce. That is what I believe that we have going on, or at least that's what the big money is betting on out there. And betting's not the right word. That is what the big money, that's how they position themselves in the light sweet crude marketplace. The commercials out there, the CFTC data, they are saying that, you know what, in a big way, they're expecting light sweet crude to move down in price out there. So now I'm just watching for this little rising price channel here to fail. And if we take a look at, I create that little peak counter out here. So it's just it's just a easy way for me to count the peaks in any chart that we look at. It's a little tool that I've created here for the Ensign software. No way does it... I didn't mean to hit those are the primary trading range boundary lines. I didn't mean to hit that button. Well, I have that tool as well. Let me go ahead and delete this off of here because that's not what I intended on showing you. But what we do have is light sweet crude has made its fourth peak out here. Let me go do that now. Let's go. It says count up. If I hit that button, there we go. So that fourth peak may have taken place on Friday. That's Basil's peak D out there. We get a lower close there. If we don't get a move above 100.75, you'll have had your fourth peak. But the key here inside light sweet crude is going to be, can it break this little rising price channel that it is traveling within? So that's what's going on with black gold, Texas T out here. Let's go check out the indexes, see what we have going on. Let's start off with the New York Stock Exchange. This is really the key one out here now on Monday. Today is Monday. On Friday, did have a little doji candle that had formed out here. You can see if I pull this back here further, you can see the nice rising price channel going all the way back into the 2011 time frame. That's what the black lines on my diagonal lines on my screen are taking a look at. You had a 1 to 1.272 A to B equals CD that is completing. That's at the 10,351 level. Guess where we're trading right now? 10,351. Little doji candle on Monday says that, it's getting a little bit tired out here. We'll see what kind of candle forms today. It's nothing to form a bearish engulfing candle. Just has to be a couple of ticks lower than the close or the open of Friday, which is out at about 10,353. So that would be nothing to occur. It would really have to be a substantial bearish reversal signal, though. But what the New York Stock Exchange wants to do, if we switch over and take a look at a little longer-term time frame, let me see if I've got that actually in here. I don't know if I do on this. No, I don't. So I've got to switch. I'm not going to switch because if I lose that, I'll be really bummed out. I'll have to go redo work. That took me a while to build. So let's go back over here. I've got another tab. There we go. We looked at the monthly tab earlier. Monthly tab says that price absolutely wants to get up and tag 10,387.17. I would expect that to occur over the course of the next 2 days out here. We take a look at a weekly chart of the New York Stock Exchange. Really, we'll see the same thing. Now, the weekly chart, even though Friday was a it was a little doji candle. Remember, the weekly charts are going to trump the daily charts, and the weekly chart shows a bar that closed up at the top. It's if you take a look at strength of bars, it qualifies as very close to a number one strength bar out here. Wasn't as wide-ranging bar as the week before, but still not too shabby. Markets don't end on bars like last week's out here, so even though we had a little bit of a reversal signal on the weekly, on the day, not a reversal signal, even though we had a little timeout candle. Let's call it a timeout candle on on the daily. The weekly says, I don't need any timeout. All I want to do is go tag that 10-387-17 area, and that's going to be very key for us. There's an A to B equals CD to the upside inside of the NYSE that says 10-535 could be in its cards, even 10-827 out there. So we'll just take things one day at a time, one moment at a time. That's what's going on inside the New York Stock Exchange. If we take a look at the S&P 500 out here, the S&P 500 right now, a flat market, trading out at 1840.59. There's the monthly. We're not going to pay attention to the monthly. In the second segment, not in the third segment, because that's our longest segment, we'll take a look at the longer-term time frames of the Dow. We'll take a look at the S&P 500. We'll take a look at why, at this stage, it does not look like any major top is forming out here, and that we will have higher price. That doesn't mean that we don't see some type of retracement. But if we, we'll do that during the longer segment here of the show. So we'll plan on doing that at 10:30 or whenever that segment kicks in. However, if we take a look at the daily chart out here for the S&P 500, it's got an A to B equals CD up. That takes us now to its next level, right around the 1853 mark. We're trading at 1840. So in the cards for us here at the moment is a move up to that 1853 level. Can't tell you when that is going to happen, but I can tell you that the move along that C to D leg is much stronger than A to B. It says it's got more energy, and that says it wants to move to higher price. So that is that's what the daily chart shows us. If we take a look at a weekly chart here, for the S&P 500, the weekly chart shows that it's above its next primary trading range. Looks like we've got about a 70-point area. That would say right around the 1850 level is where, there you go. So 1850, what did I say on the daily? So around 1850 is a primary trading range boundary line inside the S&P 500. On the daily, what did I have? That 1853. So there we go. We've got two confirming signals at that 1850-ish level. If we take a look at, again, the weekly bar out here from last week, nothing bearish about that candle whatsoever. There is no resistance here inside of many of these markets. These markets, in a market that's got momentum to the upside, let me ask you this question. Are you one that wants to see all kinds of baggage on the left-hand side of the chart? Areas of supply where you have prior buyers and sellers? Or do you want to see something that's going to a party that's got nothing but party favors, lots of good times out there, no resistance at all? Well, that's the markets that we're trading here right now have. The S&P, no absolute resistance at all. There's no resistance. None. Nada. Zilch. None. Inside the Dow, there's no resistance anywhere to the left-hand side. There's no natural line of buyers or sellers that are out there. So now it's off into just, moving into new territories out here. Doesn't mean that things can't change, but the momentum will change at some point in time. I just can't tell you exactly when it's going to change out there, but what I can tell you is don't be afraid of higher price, because on the left-hand side, there is no wall of worry to climb out there. Only wall of worry to climb is some kind of mental wall that you might put out there. If we take a look at the Dow here, see what the Dow is doing on a daily basis. The Dow right now, flat. Trading out at 16,482 out here. No reversal signal. Did complete the 1-to-1 A to B equals C. This is the short one. This is the small one. I've actually completed really two A to B equals CD patterns. The small one coming off of the November 6th low, but also the larger one coming off of the low here from June 21st. So we do have some A to B equals CD patterns, but the Dow, maybe it wants to move to about 16.6 before it takes its rest. 877-927-6648. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got the Dow, 5 points. It could be kind of slow here for the next couple of trading sessions. S&P is off a point. Russell down a point as well. Let's go check in on some of the core stocks. Let's go see what's happening out here. Let's take a look at Apple. It's off $6 right now. So let's take a look and see. The apples are falling off of the tree out here. Apple looks like it's now going to come back and close the gap that was formed out here. That was on the trading session of December the 20th. Actually, you have a little bit of an island, so I am seeing inside Apple. I didn't notice that before. Looks like, this formed a little. Let me make sure I've got all the active data inside of Apple out here. Alt-7. Yeah, it formed a little bit of an island, so it's coming back to maybe rescue passengers off of that island. That would occur if we see a touch of the 551.61 level. It's at 554 right now. Volume here this morning on the pullback, that is got about 2.6 million shares. The current swing point low is on December 18th. That's got 20 million shares. So we've been trading for an hour. It's got some pretty decent volume, 20 million. Let me try to do my math. It's done 2.6 on kind of a light trading session. That's some pretty good volume out there. That equates to about 15 million shares or so. Not enough to bust down the December 18th area, but enough to at least pull back into the little island, and close that. So we'll keep an eye on Apple. It would be very strong for it to not do that. We'll see if, in fact, it does that and gets rid of that little short-term island bottom pattern. That's on Apple. Let's take a look at IBM, see what IBM is doing. Now, IBM is back into the range. It is back into the consolidation pattern. It says that the breakout to the downside was a false breakout, albeit with volume. There was some big volume for sure, and that was on the trading session of October 17th, as we saw IBM gap down with 22 million shares. But nonetheless, it has broken back inside. It's done really a couple of things. One, it's broken the descending price channel. This is the price channel that began back here on April the 5th. And so it broke through that. It did that a couple trading sessions ago. Did it on, looks like December 26th out there. And as it was also doing that on the 24th, it was also getting back inside on the daily chart, inside the range of the consolidation that it broke out. I have marked about 181.10. You're trading at 185.69 out here. So as long as IBM can stay within inside that 181-ish mark, and the weekly chart will show a different time frame. The weekly chart here probably shows the time frame or the price point of about the low here. I would use the October 18th low right around 172.57. So it is back inside its consolidation. When you break in, so here's the weekly chart. You can see the descending price channel inside the weekly chart as well. Once you get back inside, if you can't bust it out, what's it try to do? It tries to bust it up to the upside. That is very bullish for the Dow as we speak right now, because that says that price could travel eventually back up to the 211 area, the top of its consolidation pattern. If we take a look at just simply now retracements and coming off of the swing point high from March 15th down to, we'll use the low here on December 13th. What we'll see is the dead cat bounce, a 0.382 retracement, slightly overhead, right around 189.26. A normal move would take you up to the 0.618 area, right around $200. 199.44 would be the number. But that is bullish for the Dow, with IBM back inside of its trading range, its consolidation that in essence has been in place since about August 2011 or so. So it is a long-term consolidation pattern out there. Let's take a look at Intel, see what Intel is doing. Right now, it is priced out at $25.74. It's trying to deal with its swing point high that takes you back to June 4th, 2013. $25.98 is the number out there. That swing point has 68 million shares. As we have been trading into it, it's been on lighter volume, 12 million, 16 million, 12 million again. Today, it's done 4 million shares, so pretty good volume. How about that? Intel's got some nice volume in it here this morning as it tries to take on and take out the swing point high of $25.98 out there. That takes you back to the June 4th high. Let's pull this back a little bit further out here, see what we see. So there is a little resistance area here. Let me do this. Let me get rid of a couple of things. Let's get rid of the relative strength stuff out here. 1, 2, 3. Let's get rid of it all, I guess, huh? Yeah, I don't have anything on here. Delete all. There we go. Now it makes it a little bit easier to pull back. Let me see. So there is a little window here that has been tested and has held. So here's the area for a real breakout to occur. Is this it? Yeah, this is it. So here's the breakout area. And this is a downdraft, folks. This is the window that was created back on August 23rd, 2012. You see a little gap in there? This is where gaps become your friend because they really provide you with a ton of information. If we take a look at that little window between the low of the session on August 22nd, that's where my black line is drawn across the screen. That's a window that is trying to be repaired. Moving back up above that would be quite bullish for Intel out here. We closed just slightly above that on December 26th. Today, you're taking that on as well. We've got the Dow is up 2, S&P is down 2. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow is up 8 points. So speaking of the Dow, let's go speak of the Dow out here. Let me put the, we take a look at some of the markets right now. In fact, if we take a look at the Dow here, let's take a look at the monthly chart for the Dow. So I'll try not to jump around too much, but we looked at the daily chart earlier. Let's take a look. Here's a beautiful monthly chart of the Dow. Now, the monthly chart of the Dow, if we take a look at trend lines, remember, trends were meant to be broken. Those of you who have some of the, those of you who, grew up in the disco 70s, you've got those fire retardant suits out there, puka shells, high heels, the whole bit. Well, trends were meant to be broken, thank goodness. In this case here, if you take a look at a trend line, this is the one coming off of the January 31st, 2000 high. Inside of the Dow, 11,750.28 is the number. If you take that swing point high as well as a swing point high on October 31st, 2007, that's out at 14,198. Now what you can see is I'm using a little dashed line. If we're watching this on Tiger TV, we can see this month here we have broken. It has broken above that trend line out there. Now, what does it mean? Well, the most empowering, most important aspect of the mere fact that it broke through that trend line is not that it broke the trend line. Really, the most important aspect, in my opinion, is the mere fact that the relative strength index, the relative strength indicator on a monthly basis, right now, is at a price point, there's not a price point, at a value of 74.97. 74.97. That says that we've got no divergence in the relative strength. No price relative strength divergent pattern that is in place as we speak on December 30th, because the prior high took place here on July 31st, and that was at 73.86. That was the highest RSI reading on the monthly chart out there. That would be our beginning point. So as I say, right now we are at 74.96. Why is that important? Well, because the last two tops inside of the Dow out here, and actually it's way more than the last two tops, just the last two visible tops that we're looking at on my screen here, those had that price relative strength divergence pattern out there. That is important because we do not have that at the moment. Now, get some big sell-off here today, tomorrow, and that whole thing could change, but I don't think that that's really what is in the cards. Now, let's go back, and let's go back to this is a monthly chart. Let's take it back to, I guess I had it already in there. Oh, let's take a look at some trend lines here. Let's take a look at some price channels. So when was the last time that the Dow broke through a price channel and continued going to the moon out here? Well, let's go back to the time period. This takes us back into 1982. So in 1982, and again, which is a monthly chart that we're looking at on my screen out here. First time I'm showing this chart. And if we take a look at the channel lines, what's interesting is the actual crash in 1987, price came down all the way to the bottom of that channel line. Now, the channel line had been established, really began truly anchoring itself, I would say, back in 1984, August 1984. So we're using the co-located opens and closes. In this case here, it's primarily the opens of the session. We'll use August 31st, 1982. You can use both the close in July of 84, the open of August of 84 out here, and identifies a pretty good bottom rising price channel. Along the top out here, I'm using the high that came in back in August of 1987. I'm going to show you what you can even see here on a monthly chart out here. You'll see price relative strength divergence because that high that was formed out here, and if you're watching this on Tiger TV, you can see it, or if you can, I'm going to read the numbers to you. But if you take a look at August 31st, 1987, that RSI reading 85.22. And if we go back, we find the most previous high out there. We had 87.64 back in March of 1986. Again, it's a longer term chart out here, but we made a higher high with less relative strength. Those are always, it is the absolute single best indicator out there for identifying market tops and bottoms, quite frankly, as well. Now, you need to learn how to trade that. I like to be able to teach folks how to do things, so just click on my name, go check out Mastering Probability. As I teach how to do that, you got 30 hours worth of education, access to me to take a look at charts with you, and the whole kit and caboodle out here. But you can see even on a monthly chart here, prior to the crash in 1987, now this is a monthly chart, but what I want to show you is that the trend line here, the channel line, was broken to the upside. Now, you can't really break a trend line to the upside if price is moving to the upside, right? It just means you've got price moving higher. Nonetheless, this channel line was broken back here in February of 1995. Imagine, as we take a look at the price channel that I put out there right now that we're looking at inside of the Dow, imagine if your belief system was that it can't happen. You can't break a trend line or a price channel because it just doesn't happen. Well, then you'd have to say, well, why not? Why not? Go back and become a student of the actual Dow chart or other charts out there. Look, folks, back here, the Dow was free to run. There was no resistance out here. And I'm not saying we're going to run like that. I don't know. Here is here's the RSI. Here's getting into the over sold. Of course, you got big, huge bull markets out here, bull market legs. Like, I am not going to prognosticate and forecast the future. I'm going to take a look at patterns, what the charts are saying to us, and what I am willing to do, and I hope you're willing to do as well, is I'm willing to take new information as it is provided to us on a daily basis. But what I also know that occurs at highs, whether it's on a monthly chart, whether it's on a daily chart, whether it's on a weekly chart out here, I know that these price relative strength divergence are a better indicator than any lunar, any celestial, anything that I have found out here. If you know of something that works better, then email me. Give me a call or something, because I'm a student of the markets. I want to be able to identify and find those things as well. Here's another rising price channel. This is coming off of the crash back in 1929. The lows made in 1932. Here's a rising price channel. You can see price broke through that price channel, through the trend line that would have been established. This was back in 1954, and just simply continued to move higher out there. So trend lines are good. They're helpful to identify. They're also helpful to identify when things are breaking above those areas. In the prior hour, we took a look at the U.S. dollar, Japanese yen. I suggested, because of the monthly breakout there, that you should be looking at maybe buying Gartley buy patterns as opposed to trying to actually sell that currency pair, because you got to break the real trend inside the U.S. dollar. Japanese yen at this moment is to the upside. It is not to the downside. It's up against an area of normal areas where people get off an elevator. It's made a 0.68 retracement. Go watch the first hour if you'd like to take a look at that. But let me do this here. I've got let me see if I can put this up on my screen here, because I've already got some work that's already done here. Give me a minute to start the slide show. There we go, from the beginning. But anyways, here, if you have not test drove my newsletter service, Mastering Probability, go do it. I'll teach you about the Rhodes Momentum Trading strategies. It includes the indicator. Comes with a 30-day unconditional money-back guarantee. It includes a money management workshop, so you get that for free for 30 days. Includes the use of my position size calculator. That'll teach you about how to really use money management, create stops out there. So be resolute about your New Year's resolution. But if we take a look at the Dow top in 1929, the actual high was formed on September 3rd, 1929. That was the high in the marketplace out here. If you were just take a look at this stock chart here, wouldn't give you a whole lot of meaning, but if we take a look at what's interesting here about the Dow that I noticed, just like we were looking at inside Apple that I just recognized, was this little island bottom that had formed inside of Apple. Well, inside the Dow, it actually formed an island bottom pattern. It did that on August 12th, 1929. Now, when it comes to reversal patterns, the strongest reversal pattern, so we're going to learn from this chart here, and you'll be able to apply that to Apple. Because an island bottom pattern, I don't care where it forms, an island bottom pattern is as strong of a reversal signal as you can find. Likewise, an island top pattern is as strong as you can find as a reversal that would be bearish out there. When those patterns fail, they are screaming. This is not Paul Revere running through the streets of Boston, folks. It doesn't get any louder than that. Picture the loudest sound you've ever heard, and then multiply that times infinity. Because that's how loud it is when these most bullish or most bearish reversal signals fail out here. So you had an island bottom reversal pattern that was in place in the Dow. That formed August 12th, 1929. Now, what also occurred as that price high was being made that I referred to inside the Dow, guess what we had? We had price relative strength divergence. Just what we saw inside of the monthly charts that we were looking at a few minutes ago. Well, here's a daily chart. This is a daily chart. So you get the island bottom. You've got price relative strength divergence. That's not what you like to see. We ended up with a bearish reversal signal out here, a 2-day blended bearish engulfing candle. They teach you about how to blend candles out there. So were there signals inside of the Dow of tightening your stops, of getting out of a market, of going short? Yeah, of course there were. Well before the actual crash took place. Now, we also had a bearish crossover that took place on September 20th, 1929. I teach you about those crossovers inside my newsletter service, Mastering Probability out there. So you had a number of different indicators. And then what else did we have out here? We had price actually close below. We had price closing below, if I switch back here. We actually had price close below. That's this black line going across my screen, closing below. Before the crash took place. So we had it taking place with price getting below that level. You want to talk about signals out there? Those are signals that form inside the marketplace. There's our bulls and bears that come to work each and every day. They provide us with a ton of information. We just have to open ourselves up. If we take a look at the Dow as it was making a bottom back on November 13th, 1929, guess what? On November 14th, we had a nice bull sash candle that confirmed what? A price relative strength divergent pattern to actually move to the upside. It works at the tops. It works on the bottoms. The final low of that Dow that was confirmed. This was back in 1932 out here. There was a low that came in. That was the final low, and that was confirmed with what? A price relative strength divergent pattern and a nice bull separating line inside of the market out here. Here, back in 1932, here's a nice little high that's out there. What occurred? Price relative strength divergence. So this is on a daily basis. Here's the Dow back in 1930. Back in 1933, the signals. Here's the 87 crash. Back in 87, this is the daily. Remember, we were looking at a monthly before. Well, the daily, it really sticks out at you. The price relative strength divergence pattern that was out there. And you had a nice little bearish cross. This was well before the 87 crash. So I can understand, just looking at a blank chart, not knowing about these tools, how you wouldn't know what the message of the markets are. But you can see that here's the weekly chart for the Dow. This is back also before the 87 crash. You think there were some signals ahead of time? There absolutely were signals ahead of time. You get the divergence, you get a little bear separating line that occurs on this trading session back here well before that crash cycle was out there. And that's why it's important to take a look at the past, because we can learn so much from our past by taking a look at the stock charts. Now, folks, excuse me while I grab a little green juice out there. By the way, I was flipping through the channels last night, and as I was flipping through the channels, excuse me, what I came across was that segment called, Fat, Sick, and Nearly Dead out there. It was on Headline News. They played it. I don't know if they're going to play it again. If you haven't seen that, you probably should. I'm drinking my green juice right here. Out here, the best juice in the world to be drinking out there, but it's a great, I forget the guy's name, Joe something or other. In any event, I just kind of that wasn't even a smooth segue into anything. But I would recommend, especially if you are somebody that's going to make a New Year's resolution, you want to lose some weight and get healthy at the same time. Go. You can find that video back on the internet or what have you, so you don't have to wait for it to come back on television. But they most certainly did make the big time out there, which was nice to see. And I can tell you personally, I wouldn't recommend that you do something unless I do it. And I've got my green juice sitting here right now. So, being a student of the markets, one of the things that is, if you go back to the crash cycle in 1987, one of the things that folks will write about with regard to celestial beings is the mere number. Let me switch out of this for a moment. I think I've got it on a chart out here. Is the number of conjunctions, planetary conjunctions that was occurring back before the crash in 1987. Let me see here, New York Stock Exchange channels. So I've gone back and I've studied. I've got the ephemeris. I've got it digitized, so I can identify all of the. I can identify really anything and apply it to a stock chart. Now, if you take a look at the set of conjunctions that occurred, do I have them back in 87? I don't think I've got them. I can tell you that back in 1987, let me tell you what we had. We had Mercury conjunct Venus. We had the Sun conjunct Mercury. We had Mercury conjunct Mars, the Sun, Venus, Venus, Mars, the Sun, Mars, all taking place between August 19th and August 25th out there. And many books that you'll read will tell you that that was the signal when you have all those planetary conjunctions that is going to identify a significant change. Look, back in 2011 right here, I've got them on my screen here. Here in between February 17th and February 25th. So I've taken the day and I've extended it 1 day. 8 days out here. We had 2, 4, 6. We had 8 planetary conjunctions that aligned up. Now, albeit, and this is in the month of February out here, we did make a little bit of a high. Of course, that got taken out during the month of April. Well, in March of 2011, guess what? We had another 5 planetary conjunctions out here. That didn't form a market high. Did we have a pullback and a retracement? Yes. But was that whole set of conjunctions really the indicator that we could use? Because, look, in 2012, 2013, in 2013, we had a set of planetary conjunctions that took place in February. We had a set in March. We had a set, 2 sets in March out there. And none of those actually, I don't think this is supposed to be 2000. Yeah. Here we go. I just got to shorten my chart out here. Here's those sets. And none of those actually worked and identified any kind of a market top. Well, in 2014, we don't have any of those sets of conjunctions. So even if there were to be, there is no set of those conjunctions that exist out there. Price relative strength divergence, folks. Put that one in your bag. We'll be right back.
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Dow's up 7. The S&P is off a point right now. NASDAQ Composite, weakest index out there, down about 0.25%, is up 9 points. In the scheme of things on a daily chart, not a big deal out there. Apple's off $6 right now. MasterCard is now leading the charge, the upside. Renaissance, RNR, that's up 3.5%, up $3. Jazz Pharmaceuticals, a jazzy one, up about $3. Tesla's up $2.50. Polypore International up about $2.50 as well. Chipotle up $2. Priceline is one leading the charge to the downside, down about $15. Priceline, excuse me, up against a real significant area of support out there. Sorry about that little piece of dust in my throat. Netflix is down about $7 right now. Amazon is up $3.83. Google's down $3.40. Hence the pressure that we're seeing inside of the NASDAQ. Had a question inside of the Tiger's Den. Folks, if you haven't had a chance to check out the Tiger's Den, you can be resolute about that for your New Year's resolution. Great group of individuals, traders, a lot to learn there. You can test drive that for 30 days out there. So go over to the homepage at TFNN.com. Do that right after you've signed up for Mastering Probabilities, unconditional money-back guarantee, 30-day money-back guarantee on that. I've got the 30-year Treasury, the weekly chart, up on my screen. We had just been talking about utilizing the price relative strength divergence indicators. This here called the top out here. That top coming in on the week of July 27, 2012. What kind of pattern did we have that formed out there? Yep, we had a price relative strength divergence. Gave you the bearish reversal, the bearish engulfing candle. Gave you the full 9 yards out there. Actually called the high of the bond market. Now, what we are seeing also on a weekly chart out here is we're seeing some bulls trying to step in. We've got a price relative strength divergence indicator on the bottom here. That bottom was followed up on December 20th, the week of December 20th, with a little hammer candle. Now, the problem here is it looks like we have a close below that hammer candle. So this appears to be failing as we speak as of last week. The low of that hammer was 128.13. The actual close last week was what? Close 128.09. So just slightly below the close of a hammer. Of course, you know, if you get a close below the low of a hammer and you are long, you are wrong. Now, look, there might be a little bit of a counter-trend rally is all that this is really signaling to me out here. You'd have to see bonds get above 130.76 in order for that to change my outlook there. Instead, that is the level right around 130.76 that becomes the potential shorting area for the 30-year Treasury. But to take things one thing at a time, we do see the signs here of bulls trying to defend this area. And, of course, we see that the bears here are losing their energy on a weekly basis here in order to be able to push price down. If we go take a look at the NASDAQ, let's go see what the NQ is doing out here. Since this is the weekly chart, no divergence, certainly on the weekly. Let's take a look at the daily chart. These are the Rhodes momentum indicators on the system. What we do have out here on a daily chart is what? We do have price relative strength divergence, and that popped up, and that actually is potentially confirming here today. You got the signal here, and you got it on Friday. Little bearish engulfing candle, price relative strength divergence. You're having some follow through here today. That's on the daily chart. The NASDAQ has been the strong index that says, okay, maybe we do see some kind of a pullback that gets underway out there. So we want to be paying attention to the lead dog, and the lead dog, we want to be paying attention to both the Dow as well as the NASDAQ out here. So the Dow is up 350, S&P is up 2. Folks, if you're off to start your Monday, have a marvelous Monday. Thanks so much for being here. Don't forget to go over to the homepage at TFNN.com. Click on my name, Steve Rhodes. Try Mastering Probability, 30 days, unconditional money-back guarantee. You can give me a call. You can send me an email. We'll be able to take a look at your stock chart. Stay tuned. Basil Chapman is up next. Have a great Monday, folks, and we'll see you soon. Bye-bye now.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.